Welcome back to Quantreef.com. Ethereum's trading around 1855 right now, sitting almost dead center of a tight range that's been squeezing for the last few hours. That kind of compression is exactly when you want to check liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, and positioning together, because the breakout direction usually shows its hand first in one of these layers. Let's get into it. Price is at 1855, down about 1% over the last day, and structure strength is rated low with high stop hunt risk, which tells you neither side has firm control yet. The 4-hour pivots are stacked tight, support around 1855 and 1848, resistance around 1873 and 1882. Momentum reads neutral to slightly bearish given the day's red candle, but this is chop, not conviction, until one of those pivots breaks cleanly. Ethereum sitting below session VWAP at 1865.78, and also below both anchored VWAPs off the recent swing, the high anchor at 1871 and the low anchor at 1862.92. Trading under all three tells you sellers have been in control of value for this session, and it means any push back up into that 1862 to 1871 zone is really a test of whether buyers can flip it into support, or whether it gets rejected right back down. The nearest real liquidity is just below, at 1847.70, sitting only about 0.5% away with close to 35 billion in notional resting there. That's a magnet, and price has an 88% model chance of tagging it within a day. Above, the bigger wall sits at 1900, holding almost 39 billion, but it's over 2% away and only carries about a 1 in 5 chance of getting reached in the next day. Markets tend to drift toward the closer, heavier pool first, then decide whether to bounce or continue, so that 1847 area is the one to watch first. On the panel right now, resistance above is the 1H swing high at 1871, then the stop-loss cluster at 1881. Support below stacks as target 1 at 1820, target 2 at 1778, and target 3 at 1712. Given the downside pool sitting so close and the high reach odds, that support ladder looks more likely to get tested first. A clean reclaim back above 1871 would be what invalidates the bearish lean, since stops are likely clustered just above there. Above price, there's a 4-hour bullish gap between 1849 and 1875 that's already 99% filled, so it's basically done its job. Right above that sits an unfilled bearish gap from 1863 to 1876, which is the one acting as a magnet right now since it hasn't been touched. Higher up near 1900 there's another bearish gap that's 90% filled already. Down below, there's a daily bullish gap way out at 1694 to 1646, largely unfilled, but that's a longer, 30-day story, not this session's concern. Ethereum's swing runs from a high of 1884 down to a low of 1820.58, and price is sitting right inside that range near the 50% level at 1852. It's basically hugging that midpoint, which is why direction feels undecided. A clean hold above the 50% would open the door toward the 61.8 retracement near 1845 acting as support instead, while losing it points back toward the 78.6 level around 1834. The card prints an N of 78 with an HTS of 56, and underneath that the layers disagree with each other. Volume and liquidity is strong at 80, institutional positioning is healthy at 71, and behavioral sentiment is elevated at 75, all suggesting real participation. But Fibonacci location scores just 28 and volatility sits low at 37, meaning price is stretched relative to structure with little energy behind it. That mismatch is exactly why the overall grade reads neutral instead of leaning either way. Retail is heavily long here at 71%, top accounts are long 67%, and top position holders sit at 60% long, so across the board the crowd leans bullish. But the 4-hour taker flow tells a different story, with shorts taking 48 to 52, and short dollar volume at 2.18 billion outweighing longs at 2.02 billion. That imbalance, longs everywhere but sellers more aggressive in the immediate flow, is exactly the kind of setup where a squeeze lower would flush out over-leveraged retail longs before any real reversal. Given the tight downside distance and the 88% reach odds, the 1847 liquidity pool is the more probable first stop, and a sweep there that holds could fuel a bounce back toward 1871. Fail to hold it, though, and target 1 at 1820 comes into view next. On the upside, 1900 is the bigger wall, but it's further away and less likely to get tapped soon. Remember, Ethereum takes a lot of its cues from Bitcoin's own liquidity map, so before leaning either direction here, it's worth checking where Bitcoin's nearest pools sit, since a Bitcoin sweep can override a clean-looking Ethereum setup entirely. The bullish case leans on defending the 1847 to 1856 zone, with entry near 1848, stop below at 1799, and target stepping up through 1857, 1873, and 1882, though the risk-reward there is thin. The bearish case fades a sweep of 1900, stop at 1949.79, with targets at 1820, 1778, and 1712, offering a cleaner risk-reward. Either way, confirmation comes from how price reacts at these liquidity pools, not from guessing in advance. Ethereum's parked right at a decision point, and whichever side actually takes that nearby liquidity first is probably the one that defines the next rail leg. If this kind of layered read is useful, drop a like and subscribe, and know that quantreef.com runs this same 9-layer structure, probability and liquidity breakdown across over 100 coins, with a 7-day trial if you want to dig deeper. This is for educational purposes only and isn't financial advice.